I came through the Merrill Lynch training program, and what I realized was there were so many people I couldn't help because there was a $250,000 minimum in order for me to help them. And that always bothered me because I come from very little. My parents come from even less. My father came to this country, couldn't read and write. My mother was a teenage mother, right? They got together and somehow made a way. So as I started to continue in my career, I just kept seeing, man, all these barriers where people who grew up like I did couldn't get help.
A podcast presented by the Investor Choice Advocates Network. This is Capital Ideas.
Welcome to another episode of Capital Ideas, where we explore the innovation that enriches our lives and the capital markets that turn those ideas into reality. I'm Nick Morgan, co-host of Capital Ideas and founder of the Investor Choice Advocates Network.
I'm Mark Hiraide, co-host of Capital Ideas and Senior Legal Director and Policy Counsel at ICANN.
And I'm Darrell Albright, co-host of Capital Ideas and a very proud board member of ICANN. And today we are joined by someone who has spent years thinking about one of the most important questions in finance. How do we build a financial system that expands opportunity without leaving people behind? Tyrone Ross Jr. is the CEO of 401 Financial and co-founder of Turnqey Labs, which is a platform that's helping wealth managers modernize how they serve investors in a rapidly changing financial landscape. Tyrone has become one of the most recognizable voices at the intersection of wealth management, fintech, retirement, and digital assets. Tyrone, welcome to Capital Ideas.
Thank you for that wonderful intro, and thank you for having me. I'm really looking forward to this. Excited.
Excellent. So let's start with the big picture. Why has it become so difficult for the wealth management industry to really engage with digital assets? And how has that especially impacted retirement portfolios? I actually saw a tweet yesterday, a report that came out, and it said that while the average 401k, as low as it is, the median is even far, far lower. So I think that they had something along the lines for 65 years and plus. The average 401k size was 299,000 versus just 95,000 when you're looking at the median. And I would be curious to hear your insights on, that aspect of it and the impact that digital assets can make on that.
Yeah, so this is a 13-year problem for me, but I think that it's three buckets from my perspective, where I think the issues have run into getting crypto assets, as I call them. I don't say digital assets. I can explain why, but I think that's part of the problem. So let's just start there. No one knows what to call them. Are they virtual currencies? Are they digital assets? Are they crypto assets? Is it crypto? So I think the original sin of the crypto space was just calling it crypto. I say crypto assets because it's all encompassing. Anything that would be underneath that, stable coins, tokenized assets, Bitcoin, so on and so forth, because digital asset could be my Facebook account as a part of my estate. It could be dollars, right? So I think digital assets fall under crypto assets. But when we're talking about crypto assets, we're talking about assets that in some way, either natively or indirectly, are impacted by blockchain technology. So I think there's been a lack of education, if you will. So there's an education gap between what advisors are used to getting around other asset classes from the CFA Institute, the CFP board, that they're not getting. And then I think there's a second level to that, where there's just been a whole bunch of proselytizers and grifters in the crypto space that have misled people on what actually was happening underneath and what the real value was. So there was all these weird narratives that, Bitcoin was going to replace the dollar. That was never going to be a thing. But we ran with that. The second level of it is, and this is more of that's my advisor hat. My entrepreneur crypto founder hat is there's a plumbing issue. The entire wealth management space runs on custodial fees. So if I open an account at Fidelity, Schwab, Pershing, there's plumbing underneath that goes into Adderpar, Orion, Investnet, Black Diamond. So I know when any account is open there, all that data comes back into my performance reporting platform, which is, we all know, the holy trinity of an advisor stack: the CRM, portfolio management software, the planning software. Nothing like that exists in the crypto space. So you can't get that data from one side to the other. Crypto custodians, if you want to call them that, They don't transfer cost basis, right? There's only one account type. There's no beneficiary designations. They don't generate statements. These are all major issues if you are an advisor or you are a registered rep trying to get into this space in a compliant manner. The tools and resources just aren't there. The last level of why I think that happens, and getting into what you were saying as far as getting these assets available in 401k plans or so on and so forth. If 2 and 1 don't happen, how in the world are 338 advisors and folks that are responsible for building portfolios and understanding risk and running analysis? We don't have any data. We can't really run consistent analysis. Also, I promise you, I'm the biggest crypto hippie you will ever talk to in your life, ever. 17 years of returns on the oldest asset. It's not really going to get it done, right? For a space that relies on the ability to back test. So a lot of these things have come together, and it's just easy to go, well, we got to let this thing play out. Now some things have happened. We've gotten a little bit more regulation. We've gotten ETFs. We've gotten some things there that, again, advisors are more comfortable with. But as I was saying, this creates more problems than it solves, because the entire wealth management space is incredibly nuanced, very compliant driven, very dependent upon data, very dependent upon very slow, methodical approaches to investment management. So I think all of those things together is why you don't see a lot of folks really, especially younger folks, let's just call it 45 and younger, putting a lot of money and faith into 401k plans and YOLOing into crypto assets outside of it. But also the barrier between really strong fiduciary grade technology that allows wealth managers to do this in a very specific and compliant way. And if that was there, I'd imagine we see that lift in 401k plan.
Tyrone, you might be old enough to be considered an OG in crypto assets, but I'm old enough to be considered an OG on capital markets regulations. And we're really excited to talk to you right now at this time, because I think that capital markets have operated based on regulations, of course, promulgated years ago. And those securities regulations, which were premised on ensuring transparency and full disclosure, have clearly become outdated in view of modern communication technology. I think one thing that was very fascinating to me in 2017 during the ICO boom was, one, of course, unregulated securities offerings can result in abuse and loss. But the more interesting thing to me was that there's a huge appetite for early stage investing opportunities by retail investors. For years, uncertainty around digital assets hasn't been about technology, it's been about regulation. And as you know, Congress is now considering legislation to clarify regulation of crypto assets and the digital asset market. And the SEC in the last 6 months has offered interpretive guidance in the area of digital asset regulation and registered offering reforms that, in my mind, will lead to increased opportunities for retail investors to invest in earlier stage companies and projects. So from your perspective, working out at the intersection of wealth management and fintech infrastructure, how much of the industry's hesitation has been driven by regulatory uncertainty versus basic concern over the crypto business model? Seeing crypto as an asset class take some hit over the last year in particular, but over the last several. And if we get greater regulatory clarity, do you think that meaningful changes in how advisors engage with digital assets, or are there deeper structural barriers that are still standing in the way?
There's deeper structural barriers. I don't think regulation is going to make a bit of difference for financial advisors. So let's go back to that time period that you're talking about. And I've been on record saying this. I've been on the SEC Investment Advisory Committee board in a board meeting. I've spoken to Commissioner Crenshaw, I've interviewed Hester Peirce, and I've been very, very active in trying to get them to understand the needs of investment advisors. Now, what I think the broader wealth management space has been doing has been hiding behind the fact that there hasn't been any regulatory clarity. And we've gotten as much now as we've ever had. But let's go back to that time period and look at what you said. There were, if I can count off the top of my head, I believe there were 3 updates from the SEC to investment advisors alone of what they could and could not do. They were very specific. There was broker-dealer guidance as well. And I've been telling advisors this, to say that you can't do it or there's no regulatory guidance was not accurate as far as advisors were concerned. The SEC was very active. Hester as well actually interviewed her on a day where I think the last risk alert came out, and they gave advisors a very clear guideline on qualified custody, what they determined to be qualified custody, what that looks like, a big one on that. If you were books and records, what they expected from books and records, all of these different things. So there had always been guidance for advisors to at least have some type of framework to engage in the space if they so desired. Want to know how I know? It's been 13 years for me doing this as an advisor. I've had no issues. And my firm, 401 Financial, is state registered in California. It ain't easy to get registered in California as an RIA where you got crypto all over your ADV. So if you did it the right way and you followed the guidance, which we did, and we have very good legal as well as former FINRA and everything else, it was easy to get through that. Now, to be fair, are they securities or are they not? Sure, we would want to know that for various reasons. What is the role of the SEC and the CFTC? I think every wealth manager in the world would love if the SEC and the CFTC got on the same page and provided unified guidance. That would be nice, generally. But as far as crypto is concerned, you go, okay, well, all right, fine. They're commodities. So this means, is there a CTA registration involved? Like, what do we need to, do we need to, should we all go get our Series 7 again? Like, advisors would want to know that. And I think that clarity would be great from the ability to say, all right, as a independent advisor, as a hybrid advisor, as an independent BD or wirehouse, we know exactly where we fall on that spectrum. But if you're an IA in the United States of America, you've had all the runway you've ever wanted. Now, as far as you is saying, as far as like registration and companies like Turnqey figuring out, okay, what we can and cannot do, regulatory guidance would be huge for builders in the space to go, okay, can we do this or not, right? Am I a broker or not? Do I need to register as a BD? Do we do certain things? So I think broadly the wealth management space has hid behind the fact that there wasn't any regulatory clarity. We've gotten as much as we've ever had. And I looked this morning, the Investment Advisor Association just released their 2026 snapshot. I think there's 600 firms, 57 trillion of assets at the firms they manage. 100 of those were declared that they deal in digital assets, right? Which is up a third. Now that's a good number, right? It's grown, but I still think that there's just a lack of understanding of what can and cannot be done. But also, when you look at you log into your stack every day or whatever you use for technology and go, well, I just can't run I can't even build a model portfolio with crypto. It's easier to just stay away. So I think there's more structural, fundamental issues that need to be built, but regulatory clarity will help for sure. I mean, our legal was saying, hey, you guys may have to think about the CTA if you decide to go down this route, but also we don't use a custodian. So we're an advice-only firm. I'm a believer in a non-custodial future and self-custody. We have a model that we built. We don't have clients in it, but we built it because we feel like that's the way for clients to get access and we don't have to bill on their assets or whatever. Is that compliant? I think so, right? But that's where that clarity would come in. Long-winded answer, but a great question. But I do think for the large majority of advisors, I think we can get all the clarity in the world tomorrow. I don't think Peter Maluk and creative planning are going all in on crypto.
Fair point. I think one of the issues that, with or without regulatory clarity, one of the issues that incumbent financial institutions suffer from is whether to include all retail investors. I think the inclusion question looms large, particularly I think crypto is a great asset class because of its ability to break down the inclusion barriers. I'm not sure I'm
Yes.
phrasing that right, but in other words, there was the phrase disintermediation back in the early crypto days, the idea that we don't need these financial intermediaries. So I know you've spoken and written about growing up with, your parents surviving without these intermediaries, traditional bank accounts. How do we ensure that as we get more regulator clarity in the digital space, crypto space, how do we ensure that we're keeping the inclusion that was originally there in the crypto space?
Yeah. So it's funny that you mentioned that, because that's honestly, as much as I love crypto, that's my greatest frustration right now, is that there was this narrative at one point of like banking the unbanked and making sure that people had access. And they juiced that narrative enough and then they ran away from it.
Yeah.
And here comes Larry Fink and BlackRock and everyone else, and it's all about that. So that kind of frustrates me, but that's literally the reason why I'm still here and I will always be here and I'm never leaving. It's unfortunate that so many retail investors were hurt, and especially, to be honest, folks who look and walk and talk and act like me. Black and brown people, if you look at the data, were in this en masse and at younger ages, because it was, all of a sudden, this ability to go and chase this wealth creation vehicle that we have been shut out of traditional markets before, pretended at least, or were made to believe you were shut out of those markets. So I think some regulatory guidance, again, some investor protections, if you will, I think will be helpful. But I think what we need to understand is this. If you look at the areas in the country where there's still banking deserts, like banking deserts exist. If you go to the inner city, I challenge people to do this. Don't take my word for it. Go to any inner city and go look at the line at the post office on the weekend. Why is that line so long? Because you can walk into the post office and you can get money orders, right? Why is it that there's so many check cashing places? Because I don't care about the cost if I can access my money now, right?
Yeah.
You only need to see your mother crying to go find the next open check cashing place so you can eat, which I have. I've been in the car watching her run around to check cashing places. She can cash a check so we could eat, so we keep the lights on, so the landlord doesn't come. So it's the ability to have money now. Now watch this. I personally cannot be convinced that when the United States of America announced that we were going to have a real-time payment system in the United States of America after Japan has had it since the 70s, that wasn't influenced by Bitcoin coming to be and that narrative that you had mentioned, right, of getting everyone access and so on and so forth. So I do think it forced them to do that. Now, they mentioned it in 2019. We didn't get it until 23 or 24, but now we have what they call Fed Now. It's not really being adopted by the banks. You got stable coins coming to be now. So there's been this convergence on providing more access. However, if we don't make sure now that the technology added the technological barrier, right, of understanding that people don't have in these same areas where there's banking deserts, right? So you have a technological barrier, you have lack of resources and infrastructure, and then you're basically saying, yeah, this is a panacea. This will end all your problems, right? So I think though that investor protection means, to me, yes, let's protect these people, but protecting them means enlightening them to something that they don't know, and we have to give them the education, we have to give them the empowerment to be able to do it. And I think, to me, that's my greatest frustration. That is the part that is missing. And I can't sit here and say it's not willful and intentional, because it's like, oh, they'll never understand. Or those folks are, they're not highly educated, or whatever the case may be. I think they're discounting the fact that people really care about this and they would do anything to make sure that their families are fed and there's a roof over their head. But exposure and education and empowerment, I think, is important. So I will continue to fight for that. I think that's one of the reasons why you have seen a lot of things happen since Bitcoin came into the world, because if Bitcoin is nothing else, It's just this really big flashlight that shines a light on all of the inequities in the financial system.
Mm.
It could go to zero tomorrow. I don't care. But what
Right.
it does is it goes, look in this corner over here.
The idea.
You know,
Yeah.
look at all these unbanked people in the South that
Yeah.
live in banking deserts, right? Look at the amount of people. I think the Fed household data just came out. I think there's still 6% of people who are unbanked in the United States of America. That's ridiculous. That
Right.
should be as close to zero as possible. So
Right.
anyway, again, another long-winded answer, but something I'm very passionate about because that's the reason I came into the space, and that's the reason I will never leave. It was always the thought that someone could do everything from this device,
Right.
right?
Right.
Without having to go to a Bank of America.
Yeah.
I-
Dara, I don't want to cut you off, but I have to
No, no,
respond. So I think your emphasis on empowerment and education just resonates so much with what we're trying to do. I bump up against people who sincerely want to protect investors. So
Yeah.
investor protection becomes goal number one. And unfortunately, those good intentions sometimes mean that the best way to protect someone, if protection is your ultimate objective, is prohibition. Like just don't let people into the markets and they will never lose a dime.
Yeah.
And that's so terrible. Like that's not helping them. You know, we talk a lot about the famous day in the 80s when Massachusetts prohibited its residents from participating in a new IPO because the company was unproven, it's high tech, and it was the Apple IPO. So like if your objective is to protect people by keeping them out of the markets, by making it really difficult with lots of barriers, yeah, you'll protect them.
Yeah.
And then they won't have any part in any of the market. So I really like the emphasis on
Yeah.
empowerment and
Yeah, no,
education.
for
That's the
sure.
way to go. So sorry, Dara, I cut you off. You were about to.
Well, I love that analogy of how Bitcoin shines the flashlight on the inequities in the financial markets. That's so well stated. And I also think, think about the other demographic, the youth, which is really, the future of the markets. And one thing that I thought was interesting when I read about 401 Financial, that what your platform is really designed to serve the younger demographic, that 25 to 45-year-old, and you're doing it with with basically using the financial model, so a flat fee as opposed to charging by AUM, assets under management. So I would love to get your insights. Why did you think that that was the right structure to go? And is that where the whole industry needs to go? Or should we just forget about AUM altogether, especially with custody changing?
Yeah.
If everyone's self-custody, we won't even know what the AUM is.
Yeah, I mean, you cut out a lot of fees, Dara, that everyone loves. So to answer that question, we got to go back to my Merrill Lynch days. I am a wirehouse baby. I came through the Merrill Lynch training program, and what I realized was there were so many people I couldn't help because there was a $250,000 minimum in order for me to help them, and that always bothered me because I come from very little. My parents come from even less. My father came to this country, couldn't read and write. My mother was a teenage mother, right? They got together and somehow made a way. So, what as I started to continue in my career, I just kept seeing, man, all these barriers where people who grew up like I did couldn't get help. But then I realized, oh, okay, it's because if you have the assets, then you're valuable to the firm because they can bill on those assets, and then you get all these other services as a result. And I left Merrill and I actually started my first RIA where I kind of tested out that service model where I was like, well, I don't like we custodied Schwab. I was like, I don't really want to deal with the whole sign up. So I had folks sign up through the app. You create the account yourself, but we'll just create like some type of agreement where you're just like an investment coach, more advice. So long story less long, a couple things happened. I was blessed enough to meet Jason Wank, watch him start Altruist from an embryo to where it is now, and started my first company on ramp, and I was like, you know what? If I ever start another RIA, I want to build it in a way where I feel like wealth management can and should go. And I was blessed enough in my career where I had the ability to build what I wanted, how I wanted. And that's exactly what we did. So we started 401 Financial September of 22, and the goal was very simple. Provide folks best in class advice. We want to give them a family office, private wealth type of experience without billing on their assets, white glove, meeting with them monthly, and giving them flexibility on how they pay us, hourly, subscription model, or flat fee for planning. But we will not bill on your assets. And the goal was really simple. It was like, let's just get 25 people and let's just really build this ourselves. And my partner, who's a CFP, I was like, we'll do planning, right? We'll do planning, everything from cash and debt management all the way to estate planning, but we'll make it bite size. And it kind of took off. And it was, it was folks saying, hey, do you want to take money to build this? And we love the model of what you're doing. So it was clear that there's demand for it from the client side, because we went through 25, but also from investors, and people were like, man, that's a really unique idea if you can get that to take off. So yeah, it would be nice if every firm did it. I don't think that's going to happen, but I think it would be great if more firms became advice only, were focused on that younger population that are, you call them Henrys, call them whatever you want, where they may have their assets tied up in their business or, an early stage company, whatever the case may be, but still deserve best in class advice. But also, I wanted folks who look like me to look at our branding and go, man, I feel at home there. We spend a lot of money on making sure that our branding resonated with the group. It would stop them and go, man, that feels like home. Like my nephews are in the branding, right? So our 3 or 4 largest clients are Black women. We have this wonderful, gay couple who live in Portugal. We have crypto drunk hippie founders like me and my partner, right? But and if that's all we ever accomplished, that was the whole purpose, right? And we have these wonderful conversations with people monthly. It's very transparent. It's very flexible. It's real. And it gives them the ability to have someone in their corner at all times. And I feel like that's the future of wealth management, that nimbleness, that flexibility. Leave your assets where they are. If you want us to see them, we can see them. If you don't, you don't. But there's these core pockets of tax planning, estate planning, financial planning, insurance, taxes, everything we want to get to. And everyone deserves that. And your assets should matter, right? Your intention should matter. And that's what I think we're serving well.
You've kind of addressed this just now, but I've heard you describe 401 Financial as the next gen RIA for the right now investor. So I'm curious, who is the right now investor? What's your sweet spot? And then separately, are there specific rules or regulatory assumptions that still make it harder to access that market?
So the right now investor is anyone that realizes in the moment right now they want to work with a financial advisor. And I think we found now that is just happens to be a younger cohort, or the majority of folks that are 40, 45, not married, don't have children. Those that are business owners, obviously we're like attracts like. So again, we get a lot of crypto hippies, which if you look at our website, that's not even on there. Right? Everyone's like, there's no crypto on your website. Doesn't need to be, right? Between me and my partner, like everyone just knows, like it's there, right? So I think that's what it is. It's like right now, whatever that right now moment is, what I tell our clients and what I tell my mentees this, I tell anyone this is, oh, well, it's too late. It's never too late, because in the moment you realize you want to lose weight, you want to get married, you want to go to college, you want to change jobs, right now in that moment is the perfect time. But seize that moment. So if someone just happens to come across our branding and they go, man, let me reach out to them, the right now investor, right? We're going to open this up to you. So that's kind of what that's like. As far as barriers, I would say that the fact that, I don't know if it's a barrier, I don't think there's anything regulatory or structural doing it, but I just think that it is not the most lucrative way to build a business, right? We agreed, my partner and I agreed that obviously we weren't going to take salaries. We put more in than we've taken out. But I think there's just a lack of willingness for advisors to open up a segment of their business to something like this. Like this could just be a nice satellite piece of a business for someone. But there's economics of scale. And, again, looking at that report this morning, 16,500 SEC advisors manage 176 trillion, right? Like we're beyond a pimple on an elephant's butt. Like we're small, doesn't matter. But I think if everyone just realized, hey, there's a piece of our business where in our area, it could be farmers, it could be basketball players who didn't make the NBA, who played most of their career overseas. It could be single mothers. Whatever it is, there should be a segment to it. Here's what I will say that I still want to work on. Is something that's been very important to me to do, and maybe we'll get to it, but there's just so much going on. Baby food before the ribeyes, I say. But one of the things that you brought up that makes me think about that is there's all of these social services, TAMF, WIC, SSI, all these things, right? There's so many people in this country who don't take advantage of the earned income tax credit, all these things. So if there was a firm that just focused on helping people maximize social services and all of the ability of things that was there should be a designation for that, right? Just like there is a CFP and a CFA that an advisor holds out proudly, that they help all these people in inner cities deal with, okay, you have WIC, you have SSI, you have TAMF, you get food stamps, whatever the case may be, and helping to maximize that. I think that'd be a wonderful business. I think it'd be great for society. I think it'll be great for our business, which doesn't necessarily have the best reputation, right? But I also think that it's a risk there. One I'm willing to take and I will take, but what I hope I do with 401 and we're doing with 401 is getting more advisors to say, you know what, it's worth it. It's worth it for the people that we help. Everything can't be about $1, but I do know that you're judged when you take your last breath on what did you leave in the world, right? Did you leave it better than you found it? And one of the things that make me proud about 401 is if I log off with you guys and I take my last breath, that's my legacy, that there are going to be so many people who reached out for investment advice that never would have before, simply because we were bold enough to say, hey, let's try this. And our legal was kind of like, this is kind of weird. Like, I got to be honest with you, like, it's kind of weird.
Not the normal.
He's trying to find, like, helping us with our ADV, and we're just like, nope, checking all the boxes. No, he's like, all right, well, really AUM is kind of so many different things. He's like, you're not going to trade? Like, no, we're not trading. So you don't need a custodian. Nope, it's just advice. So I think we've learned a lot. I think he's learned a lot, and I think the industry learned a lot as well, that this is possible. And yeah, if there's a point we're helping 2.5 million households, that would be awesome. But a pebble a day moves the mountain.
Yeah, very true. Let's talk about a different kind of barrier. You've been talking about sort of structural barriers, institutional barriers, economic barriers. Let's talk about regulatory barriers, near and dear to our heart. So you've pointed out that FINRA, for example, lists 235 financial credentials, which just seems confusing and overwhelming. Dara and I interviewed a guy who wanted to be able to accept unaccredited investors, like his roommates. I think he was like 25. You know what I'm talking about, Dara.
Yeah.
And so he said, oh, to do that, I'll just get my Series 65. And like down that rabbit hole was so complicated. Eventually the SEC told him to knock it off. So let's talk about regulatory barriers for a minute. You're developing an RIA, you're in the fintech and crypto space. Are there particular regulatory barriers that stand out to you that need attention, that should be reformed in some way?
There's one now that gets me a little fired up in light of SpaceX IPO and Anthropic, and you get where I'm going with this. I think it's egregious that a private company could get to $1 trillion market cap before retail investors are allowed to capitalize on that opportunity, right? And I think I saw yesterday, I don't know if I think it was Fidelity, who decreased the amount of assets you needed to $2,000 to be able to get access to the SpaceX IPO. Exit liquidity, right? Like, let's just dump on these folks. So I think the accredited investor rules need to change. And I would love it so that, let's take one of our clients, for example, and one of our clients wanted access to some type of private investment. If that individual applies and they could say, this is under the guidance of my financial advisor, and the financial advisor were willing to raise their hand, say, hey, We're going to advise the client on the ins and outs, the good, the bad, so on and so forth. There should be multiple ways for folks to get access to private investments. Highly vetted, right? Transparent, but also backed and supported by the investment industry. So that's a big one that I think can and should change. As far as the crypto space is concerned, and one that I'm really looking forward to, and again, it's funny, the Clarity Act now is a shame that it's being held up by the whole whether there's should be yield on stable coins or not. Like, guys, we saw this coming. The banks are not going to go for that, right? But I think it's a shame that it's being held up because there's so many other things in it that would be valuable to our space, right? So I think there needs to be an understanding of, again, what is a broker dealer, what is not. This is just technology that runs on its own. There's smart contracts. There's, a particular way to programmatically get these things to operate with built-in things that protect the investor. So I don't think there's been enough time spent on that of, okay, how do we regulate DeFi, right? Decentralized finance as opposed to traditional finance. And I'll give you a real life example of that. Our 401 index, it's a crypto model with, I believe, 12 assets in it. It's all on chain. The only thing that we did was set it up. We don't touch it. It goes, right? And now, and we have our money in it, and it's just running and it's going. And again, we haven't made it available to investors or not. And we've had some conversations with our legal about whether we could or we couldn't. And the truth is, even under existing rules, we can, but it's better not to until there's, as you guys know, as far as until there's absolute clarity. Don't touch it, right? The oven's hot. Don't go find out. We told you.
Right.
So it's something like that where we've gone through a very diligent process to make sure that is the most compliant. I mean, it's backed by our risk scores. We spent years building this. In our opinion, not only is it the best in terms of the assets that are in it, but it was built by advisors under the purview of a legal advisor, right, a legal counsel, tested, and clear transparency of how it runs, everything on chain, highly auditable, whatever else. So I think once there's more clarity there, I think that would be valuable. And I know some of that language is in the Clarity Act, but in the crypto space, I think there needs to be a clear line drawn between what happens in the decentralized finance space and then, traditional custody assets.
Yeah. Yeah. Well, you're speaking of the choir on those issues, so
I'm sure.
yeah.
Well, I was going to say the same thing. You're speaking ICANN's language, especially when it comes to the accredited investor definition. So we're seeing from Congress, we're seeing on the Senate side as well as the House side, new bills being introduced that would open up the accredited investor rule to people who have taken an exam. Not a 65, but something that's more for a retail investor type of exam to access alternative investment products, which everything is becoming an alternative investment product. But so what ICANN is doing is taking that to the courts, to the judicial system. And Nick could kind of weigh in on that in a second, but you had mentioned the education, and I thought, how much do you think that there's really a lack of education out there for the retail investor to understand what these asset classes are? How, where do they fit in a modern portfolio, that sort of thing?
Again, another thing that I'm very passionate, I feel strongly about, I think there's a lack of education would be inaccurate. There's educational resources everywhere, right? It's funny, I point people now, like the SEC site is really good as far as like general investor education. Investopedia, there's so many resources there, but for whatever reason, people still struggle with their financial education and, their literacy. as far as crypto is concerned, again, I've always led with education. We have something called Turnqey Institute at Turnqey, but there's, and happy to get you all access to that, but just because it's there doesn't mean that it's the best version of it, and doesn't mean that it's accessible to all. So I think that there's been a disservice to retail crypto investors because of Coinbase, a Gemini, a Kraken, a BitGo, all these other folks. There's not education built in to their model. And I think there's also been, now when you look at this boom of, back to rules, of YouTube channels and everyone putting up a YouTube and running these ridiculous ads and putting out all this misinformation. But financial advisors are reluctant to do that, right? Because of the rules. And nothing I say is investment advice, and I can't, and all these disclaimers, and then you got to go through compliance, and the compliance officer doesn't want to hear it, and there's so many other things going on, and then you don't get approval for 6 months, and meanwhile, whatever's happened, right? Markets up, down, there's so many people you could have helped. So there's so many of us that are frustrated by the fact that we just can't get online, and now some of us do, but within some parameters, just to kind of give our feelings and thoughts. So I think there are so many trusted professionals that are reluctant to give their advice publicly or share because of some of the things there. And I think that hurts the most in crypto because they're trusting some goofy who made 100x in the coin. Now, all of a sudden, he's T-WAP and all this. He's just this great trader.
Right.
And knows nothing about financial planning, knows nothing about investment management, portfolio construction, Monte Carlo, nothing. She just, these two squiggly lines. If it hits this line, you should buy. It's like, oh my God. So I think, and this herd mentality. So I think our industry's reluctance to embrace new media and beyond new media, TikTok, YouTube, Instagram, X, obviously, so many different platforms has hurt. And the podcast, and I'm talking strictly crypto hippie podcasts, are just not good. It's the same 10 guests with the same 10 talking points, talking their book. So I think that I'm in the process now of having some conversations with Newsweek about a crypto show that is basically one-on-one for the everyday investor. How does Tyrone get his mother to stop calling it a big nickel? It's Bitcoin, Mom. I can't get her to, she calls it a big nickel. Because she saw a picture once. So she's like, it's like a big nickel. So now she won't say Bitcoin. She says big nickel. I'm like, Mommy, it's been 13 years. I'm like telling you, it's Bitcoin. No, it's a big nickel. You showed me. So how does Tyrone help his mother understand it's not a big nickel?
Tyrone, I know we're running out of time. I just want to ask you this before we let you go.
Sure.
You said that data is the new AUM. What did you mean by that?
If you look at all of the LLM models now that everyone is using, they're trained on data, right? And particular types of data. And when you look at a lot of what we're seeing at Turnqey, because we have 4 humans and about 8 agents running the company, what we're finding out is there's very little data that they were trained on in our industry. Boy, are they dumb when it comes to how wealth management and finance actually works. And even financial planners now that have started to use Claude and OpenAI and other tools for financial planning, they are not good, right? Very off the mark. So I think data is the new AUM because whoever can get that data, train these models on their data at their firm, they're going to own the future. So they're ultimately going to capture more AUM because they're going to know their business inside out. They're going to know their clients inside out, and they're going to know very specific ways to market, to brand, to advertise, to plan, to model, to rebalance, to trade, all those other things. So that's essentially what I mean by that.
Yeah, it's a good point. Well, maybe we leave it there, Tyrone. This has been enlightening and a great conversation. We really appreciate you coming on.
I appreciate you having me. This was great. You guys are lucky. I could usually talk crypto for hours.
We are lucky. So we thank you for coming on, Dara.
I appreciate it.
Darrow and Mark, thanks as always for co-hosting. Everybody else, if you want more information about ICANN, go to icanlaw.org, and we'll see you on the next Capital Ideas. Thank you.